SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Let's have a look at the shorter term time frames, obviously for Bitcoin, but we're going to use traditional markets as well because the Everything Bounce 2.0 could be coming to an end, and this is where we decide whether or not we enter into a if the bear market rally actually has proper legs, or if it basically just performs as we thought it was going to do. So just a brief recap then. So we'll start off with this Dixie chart here. Take it off the log scale there. So the Dixie, we managed to get the top on the Dixie, which is fine. So far we've pulled back to the tune of 6.5%. The destination is a little bit further down, which is this 50 exponential on the weekly. We'll see where we go from there. I expect to see a bounce from there just on a technical perspective. It doesn't have to happen, but that was always the plan. So the Everything Bounce started around here and probably going to end around here, and maybe we get a reshuffling and see if we continue up with stocks, as the dollar could still remain sort of low. Doesn't have to ricochet all the way back up to the top, but you know, the overall analysis from 4 or 5 weeks ago remains exactly the same, and so far that's still in play. So let's have a think about a traditional market. So we're getting quite close. So like I say, when the Everything Bounce took place, it was from these lows. We're so far up 14% on the S&P, with a destination of around 17% to the top of this descending trend line, which is basically just above 4,000, so 4,090, 4,100, call it, give or take. And again, you know, that was the expectation for the Everything Bounce when it came to the S&P. Let's have a look at the Nasdaq, performing exactly the same. Again, you know, the Everything Bounce took place from the low to where we are right now is 12%, and that is more or less reaching the top of this trend line, which is one giant enormous descending triangle. So there's a very realistic possibility of rejection here. There's also a possibility of a breakout here. You know, on yesterday's video, we were talking about how, yeah, the bear market for traditional markets could actually be looking to be over. And if that's the case, we would extend this all the way to potentially all the way up to this level around here, seeing how we can cope with that kind of move. There would be intermediate sort of areas of resistance along the way, but a breakout would represent a breakout, and we would target a major top on the move, which is all the way up there. But again, we need to see the breakout first. Again, with everything that I've said, the bear market rally, the Everything Bounce 2.0, it's all basically supposed to be intended as a bounce, not a reversal. We can entertain the idea of a reversal if we start to see one, but for the moment, it looks as though the Everything Bounce 2.0 might be coming to an end, and we'll see if we get an extension on that, which is basically the end of the bear market. And that can definitely happen. But for the moment, let's treat it as we have been treating it for the last 4 or 5 weeks. When we said that this was going to happen, and from the outset, we said, look, the Everything Bounce 2.0 is probably a bear market rally, and we will make the most of what we get from that. And it looks as though we're getting closer and closer to the end of that, and see if we can extend that. So again, the same thing can be applied to all the other things we've been trading, except for crypto, which has been subject to that nasty Black Swan event. But even gold, let's have a look at that's silver, XAU. Let's have a look at the gold situation. So gold more or less pulled itself back out and broke out from its descending triangle formation, and also above this intermediate zone of support, stroke resistance, sorry. So that looks good. So we're breaking out on gold, and this again is a direct correlation to the Dixie weakness. Same thing can be said for oil even, but oil is a bit more of a politicized situation right now, but we're still getting the breakouts from oil with a destination of 93 and probably further on. This is a double-edged sword really, because this does represent a dollar weakness, but it also will have a knock-on effect to further CPIs down the line, because food and fuel is a direct correlation to the oil price. So Everything 2.0 potentially coming to an end, but we can always hope that we do have further continuation. Like I say, the Dixie most likely going to bounce around this level, this 50 exponential on the weekly, but does it bounce and then continue with a series of lower highs, lower lows, all the way down to this descend, this trend line, basically this decade, over a decade long trend line, which is actually it's basically a channel, really. It's a very simple channel to look at, really, and that's basically the situation with the Dixie. So over time, we should really expect a move down to the trend line, so back down towards 100 or so, over time, over years, basically. So this is generally how it's worked in the past. And the thing, I guess, to hold on for would be the fact that ascending channels like this, a rising channel, is most likely going to break to the down. They break down more often than they break out. So we'll see what goes on with that. But yeah, a bounce is likely to take place shortly, as we said right back here 4 or 5 weeks back with this everything bounce 2.0. And the only thing that's a problem here is Bitcoin. So Bitcoin unable to be carried along with everything else. So the everything bounce 2.0 except crypto, unfortunately. So now that we've seen the situation with traditional markets, and we await the glorious open tomorrow, and the stuff that takes place within this next trading week, which will be a big one. It'll be a big one because if we do start to see rejections on S&P, Nasdaq, and whatnot, and support on the Dixie, then that was what we prophesized, last month. Really, that was what we were expecting to see. And then that would likely see a negative reaction for Bitcoin. So to be fair with you, since breaking down from this area of support, which is the lowest area is going to be around 18,000 flat. It's a small box, 18,500, 18,000. That is going to be a major resistance. It's getting reinforced now by these moving averages, the 10 exponential slicing right through it. So that would make this area a very, very strong area of resistance. Basically, currently just above 18,000 flat. We are so far holding on to this descending trend line, which previously was the resistance of this descending triangle. Anyway, just zoom out and have a quick look at that. So we can see that this was a big problem, obviously, at the top. Bang, 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 bang. Several of those. We had the breakout. We were responding well to the breakout with the Everything Bounce 2.0, carrying crypto on its shoulders. But unfortunately, for things that cannot be represented on the chart, kapow, all the way down, smashing all the way back down. It's trying to hold outside of this trend line. Does not want to go back in the box. It's trying, but it's very weak. And crypto was weak from the outset, really. This is why we turned to traditional markets to try and gauge any kind of bullish momentum, which is why we called it the Everything Bounce 2.0. But from the outset, we did recognize that crypto was weak because everything else was moving at least 2 days before crypto. Crypto, basically within the riskiest of risk assets, failed to even start the momentum for a couple of days. So traditional markets are still basically the main key to all of this. And it's unfortunate. Well, I suppose it depends how you've traded it, really. I mean, it's unfortunate to see that those things are coming to an end, but it's also part of the overall analysis, which has been, plastered all over the channel. We start off with Forex, move on to traditional markets, look at indices, sometimes commodities, and then we transfer that information over to crypto to see if any of that analysis has been represented on the Bitcoin chart, which then you can only hope is going to be transferred over to altcoins. So at the moment, that's not going to be the case because we have broken down so significantly on Bitcoin that we've seen a decoupling. Basically, that's what's happened. This chart has broken its correlation with Nasdaq and traditional markets because of the black swan. Now, this is something that is, I suppose, bittersweet in a way. We can start to trade Bitcoin's chart uniquely on its own. We can think about it as a separate entity in many ways, and if we are going to do that, we have to recognize that it doesn't look good. All right, it doesn't look good, and I'm sure that the correlation will kick back into fashion again as soon as we start to see rejection on Nasdaq and on S&P and support on Dixie. Again, this is all short-term time frame stuff leading into this next week. We've looked at the higher term time frames, the long-term time frames. yesterday, which are still reasonable, but expecting further lows on Bitcoin is also a reasonable expectation as well. So for the moment, if we take it down to a 4-hourly, there is a chance of a springboard taking place on this on this chart. It may not happen, but if it were to happen, it's going to happen around the low 16,000. So between 16,000 3 or 16,400, a fair bit of confluence taking place around there. And actually, if we look at this chart and the way that this descending trend line is forming, we will be looking to see this bounce at best between today and tomorrow, really. Now, it doesn't have to happen, but if it were to happen, these trend lines, whether it's the descending trend line of the triangle and this very short-term time frame on the 4-hourly horizontal trend line, they kind of merge over the next 24 hours to basically be the make or break moment, really. If we find ourselves getting supported around there, I'm sure we're going to come down to test it with the nature of this this formation at the moment getting rejected on Bollinger Band centers, 10 exponentials, which is facing down at the moment. I'm pretty sure we'll find our way down there probably today or tomorrow. And if we bounce from there, that could be a bounce that takes us back up to the top of this area. So we're talking 18,000 once again. Now, that is not a unlikely scenario. In fact, I would favor that kind of situation taking place with the state of the momentum that we've got going on here. So we've got a reaccumulation style MACD with the green histograms and the snaking up slowly but surely to the 0 point. We're still very, very far away from that. We also aren't losing a great deal of momentum on the RSI, and the money flow index has formed a high and a low, and we might be looking to form a higher high on this one. But again, there's really not much to it. It is basically a very weak situation taking place for Bitcoin right now. And the best we can hope for would be a spring at the bottom of this Bollinger Band, which coincides with the horizontal and the diagonal, all more or less where we're sort of heading towards as we're making this video. This 16,400, 16,300 kind of area. If that fails, if that breaks, I think we nuke, to be honest with you, pretty quickly and sharply straight down to the next level of resistance, which is between 14,000, 14,500, which again is not much of a drop in comparison to where we'd be expecting a huge capitulation. The move of a further 11% down is not really enough. I would be looking for deeper dives, probably now to the holy grail, which is between the upper 11,000s to 12,000. So it's like I say, it's not looking particularly good for crypto. I have to say, it's looking pretty weak. No big deal. It is what it is. At least we've got the traditional markets on our side as far as the gains that we have made by trading those sort of things. Again, looking back at the videos, I have expressed the overall weakness of crypto being carried on the back of the Everything Bounce. Everything Bounce Part 1 was all based around traditional markets, and crypto followed. Everything Bounce 2.0 was all based around Forex and traditional markets, and crypto followed until FTX decided that they were going to destroy everybody's wealth, unfortunately. And so really focusing on traditional markets is still going to be the key for the short term. And Bitcoin is in the middle, really, of a temporary bounce, which is, like I say, the odds are against it breaking out significantly from this level, but it can happen. But it's not looking particularly good as we test that support as we speak right now to see where we go. Sundays are the worst days for trading as well, so to see this kind of taking place right now doesn't add a great deal of confidence, because Sundays are the worst trading days possible. We really do need to think about the move further down to 14 and then 12 as a realistic possibility and opportunity, really, because black swans, that's what they generally do give us. They give us opportunity, as we've seen in the past. We can still hold on to this log scale trend line from the last bear market to current day moves. We have wicked down below this in the March crash when COVID kicked in. We were supported as far as candle bodies are concerned, but we also have to recognize the wick that came down to a 27%, and then the following week another wick down of 14%. this can happen. And if that is the case, and if we just think about you know, how big this wick could be to the tune of 30%, takes us down to about 11,000. So that's all very realistic, despite having everything on the chart to say that we are approaching maybe a significant, if not the bottom for Bitcoin. Confidence will not be in this asset class for quite a while, I imagine, as this jousting takes place from exchange to exchange, trying to take over market share of FTX and even trying to take down other exchanges. There's a lot of FUD taking place for Crypto.com. KuCoin is obviously, it's always been a relatively FUD-fueled exchange. All their exchange tokens going down. Again, you know, this is opportunity for me because I'm looking to buy into a lot of these exchange tokens at the end of the bear market. You know, when things turn around. And actually, I think, you know, for me personally, this actually looks like a really good opportunity, generally speaking, because I want these exchange tokens. Because if the exchange survives, exchange tokens basically have inbuilt value to them. Their utility is pretty obvious to see. So I stand by that, but I'm still not looking to buy into any of this yet, because we do threaten this very realistic possibility of another big massive crash that actually looks very much like the capitulation that we've been waiting for across all boards. Like we said yesterday, the wick, I mean the candle that's formed on the volume profile here is enormous, growing every day. This is going to close tonight. So far looks very much like capitulation, but we also recognize that the last time that this happened, which was well, so the last bear market capitulation that took place in around here, so this was the big crash down from 6,600 down to about 3,000 some, wasn't the absolute low. It marked a significant low on the chart, but it wasn't the absolute low. That was your capitulation candle on the volume profile. Over the coming weeks, we did go down to the tune of, I think it's about another 20% or so from this candle body to here. Yeah, give or take 20%. So again, this is in line with the long-term time frame style of trying to negotiate and navigate ourselves a low on crypto. But on the short-term time frames, the best we can hope for will be a springboard bounce back up to the resistance, but given the traditional markets look like they're about to end their everything bounce 2.0, and then we can see if we go on to a further rally, basically marking the end of a bear market for traditional markets, which is, you know, that can happen. But for the moment, everything bounce 2.0 is due to end probably this week, which is all, like I said, you know, I said give it a 2 to a 6 week period for this everything bounce 2.0 to play out. We are entering into week 6, I believe now, which is pretty much exactly what I said. Right, thank you for watching. I hope you have a nice day. Trade safe. Be careful with crypto. Traditional markets are still the main driver of all of this. Everything bounce 2.0, and if that's the case, then because we're entering the areas of resistance for indices and supports for Dixie, then we should be pretty on guard when it comes to further downside that's likely to take place. But if we do get breakouts and we do get continuation of the Dixie, which I find, you know, I think in the short term, I think that's unrealistic to see us break down below that 50 exponential. But if we do see that, fair play. Then everything continues to move up dramatically. But we don't want to see a Dixie get completely destroyed in such a fast amount of time. We would like to see it stable at a reasonable area and trail back down, as it has done over the last 10 years when it finds these peaks and troughs. This is what we want to see, leading us down to a new low around 2025, 2026. Which again, you know, would allow for further upside, generally speaking, across all boards, maybe even crypto. Right, thank you for watching. Hope you have a nice day. Take it easy.